Hello, welcome. This is going to be a great topic. Today is a monthly update on the Boise, Idaho market, according to Redfin Data Center. All right, so with that in mind, my name is SeeWing Yee from the Yee Real Estate Network, and my background is such that I've been in more than 20 years of helping our out-of-state real estate investors to purchase in many different markets over the past 20 years. And Idaho, Boise is one of the markets that we have taken our investors, but not lately, not in the past few years because of the number simply does not work. Cash flow does not happen. So we currently, again, we have taken our investors to probably around 30 different states over the past 20 years. And we have exited many markets over the years, and we have enter or re-enter certain markets in the US based on the cash flow situation, based on the rent to value ratio, the cap rate 5%. And we help our investors to buy affordable homes in the fast growing markets in the country, and currently mainly in the South and Southeast, whereby someone can buy a investor can buy anywhere from 100 to a $300,000 property that rents for 1,000 to 2,500 with 25% down payment with 6% mortgage interest rate. They can still cash flow monthly moving forward. All right. So anyway, we without further ado, let's go ahead and talk about this specific market. By the way, every day I'm going to present different metros, different city, different markets, and go over the real-time data as to what's going on in a particular market. Just so you know, there's no such thing as a national real estate market. Every market is local. I repeat, every market is local. There are more than 400 metros throughout the US. Each of the metros, each of the county have different sort of situations, different data, different numbers, different growth, different challenges, right? So all of you need to just don't get, don't get mesmerized by the national media, by other YouTube videos that paint a whole broad picture about the so-called national real estate market, right? So again, we have covered several markets already. Recently we will continue to do more in all the great markets in all the markets in US which is relevant to most of you. All right. So anyway, so by the way, I'm not a local realtor with any of these markets. We have network of real estate consultants in each specific market that we promote, especially in the South and Southeast areas. But again, over the years, we have networked with many local real estate consultants in the local market that can help investors or primary home buyers buy in those markets. So if you wish to have some resources, please contact me and I will put you in touch with those resources where you want to buy a primary home in a particular market, or if you wish to buy an investment property in any of these markets that we're talking. All right. So please subscribe to my channel, what have you, and also log into our free membership within our website so you can receive weekly updates about real estate investment opportunities in the hot markets in the country. So without further ado, I'm going to share the screen. Let's talk about Boise. Now, Boise, just to recap, even before the pandemic, Boise has been consistently growing on a very consistent over the past 10, 15 years, and at a single digit appreciation, 4 to 6%. Then when the pandemic hit, with the advent of the remote working, people can work remotely everywhere they want. So for the most part, many Californians, right as the pandemic has begun in the spring of 2020, they are with the Fed lowering the interest rate to around 3% around March and April 2020. You see a just amazing influx of buyers and investors and second home buyers from mainly from California, but from some from Pacific Northwest, some from California, some from other areas of the country, but mainly from California. So they have targeted Boise, this little Boise town, and just as you can see. So with that in mind, just go over. Let me go over the median sales price in Boise. It'll just boggle your mind, right? So, and you look at in 2019, the median sales price of a typical single-family home in a Boise metro, mostly Ada County, right? ADA is a county. Boise is part of the Ada County, I believe. So, back in 2019, a mere 3 years ago, median price of a home is barely over 300. Right? Let's look at the meteoric rise of the skyrocketing of the appreciation. So then in 2020, it has risen 7% year over year, 7% appreciation to 329. Then look at this big gap from 2020 to 2021, year over year, June. Yes, skyrocketed to 40%. So I don't have an official data, but 1 year appreciation at a rate of 40%, that's virtually historically is unheard of. So during this time in Boise, Idaho, there were multiple offers, like 50 to 100 offers per house, right? And people overbidding 20, 30, 40% above asking during this time frame, which is totally mind-boggling. And then it's just shocking. Then from 2021 to 2022, year over year, in the month of May, another 18% appreciation, and the median price is 550. So let's look at the big picture. From 304 in 2019, right before the pandemic, right? Keep this in mind, 304 at the peak, a couple of months ago, May of 2022, to 550. Let's do the math, okay? I don't have a precise number. We have to continue with this presentation. So we're talking almost 100% appreciation in a mere 2.5 years. This is mind-boggling. I believe this is unsustainable. I'm sure you all agree. What goes up must come down. The question is, how much is it coming down, right? We don't know. We can monitor this market. I will come back to talk about Boise in the next few months, next quarter of this year, and we'll see the trend. So, all right, so I'll do my best to make some raw data prediction and my take about it. By the way, not years ago, back in 2013, 2014, my network, the Yearless Network, was promoting out-of-state rental property to our investors, which is mostly from California. By the way, physically, I have lived in San Francisco Bay Area for the past 33 years. But anyway, again, we promote out-of-state turnkey remote real estate investing cash flow properties to out-of-state investors, not only from California, but in other people live in other parts of the country and in the world. They enter our network, and we refer them to specific properties in specific areas for cash flow properties. All right, so anyway, mind-boggling. All right, so let's go on. Let's go over the other data. Okay, before we do that, now, if you purchase in the Boise, Idaho market in the past 6, 7, 8 to 10 years, your property has probably doubled in value, 200% perhaps. It all depends, but depending what location, what neighborhood in Boise. So you guys did very, very well. Okay, you have created a tremendous amount of equity over the past 6, 7, 8, 10 years if you kept your property in Boise. Now, for those of you that barely purchased in 2020 during the pandemic, right, you have made, as the data indicated, maybe 80% appreciation in just about 2.5 years. So the question you have to ask yourself is, how much of those pandemic equity that you have created from those purchases, how much you will lose? What's the percentage of those equity gains so far that you might lose moving forward, at least short term, okay? If you invest for the long term, 7 to 10 years, long term, over time, you're gonna make money in most, from a historical perspective, right? So short term, as you know, we go through a what some media call it a house recession. By the way, this word house, quote unquote, house recession, I've been doing this for a long, long time, for 20 something years. We have helped thousands of real estate investors buy properties, and I know real estate well nationwide and local markets, different part of the country. I have never heard the term of a house recession. What in the heck does that mean? A recession is a recession from purely economic terminology. Why is it necessary to add the word house into it? You want to scare the general public even more than they already are? This is ridiculous, okay? The media is just put out so much doom and gloom and negative headline. It's just brainwash a lot of people, scare a lot of people, all right? So that is unfair, that's unethical media bombardment. And the YouTubers out there, you know who you are. All right, thank you so much for I hate to gripe like this. All right, so let's look at all right, let's look at the nitty-gritty. Let's look at the so sorry, I'm trying to I lost my train of thought. Let's look at new listings. No, before we go over the new listing, let's see how many active listings. I'm trying to find, oh, here it is, active listings, right? So total active listings, the houses is available out there in the open market, all right? So at this time, August 2022, which is 3,631, which is a 2% year over year from last year. So similar to last year, year over year. So not bad. Now, think about it. This is before the interest rate changed from 3 to 6%, right? So at the low end at the beginning of this year, January, February, listings were 1347, 42% below the prior year, 42%, which is amazing. Then, as you can see, the trend, once the interest rate has completely reset, increased accordingly, you see a meteoric rise in active listings. So people in Boise are putting their house into the market fairly quickly, right? So 3,600 active listings. All right, now the next thing, the next critical metric that you need to hear is we have the, okay, then we look at the new listings, right? From look at the trend, look at the past month from June to July. The new listings was 355 listings year over year, 22% less than last year, right? From here in July 17th, then to August 14th, almost a month later, we have this much more listings, 726 listings, 54% increase year over year. So people are putting their houses into the market quite dramatically in the past month or so. All right, now the next key metric you need to know is the homes sold during this time. All right, homes sold. Out of that amount of listings, like 700 something listings, the homes sold month over month, July to August, is 239. Is a decrease of 39% year over year from last year, 2021. So what does it tell you? That tells you the ratio of new listings versus the home sold are is going to the opposite direction. That means you know what that means? That means the demand has subsided so much, as we've been hearing, the home affordability is at a 40-year low, right? Because of the rising interest rate and the skyrocketing home prices, right? These two metrics is really are taking a toll on buyers these days. So less people buying or have the ability to buy, right? They don't no longer qualify because the new mortgage payment is almost like 150% more based on 3 to 6% rise. So the demand of home buying have subsided drastically. The inverse relationship from new listings versus home sold are going in opposite direction. So that tells me there's some sort of interesting scenario. So let's discuss this further. Now, okay, actually, I wish you should look at pending sales also. Oh, they don't have pending sales data. So let me see what else we can look at. Days to close. Days to close. It takes 28 days to close this, right? It's pretty in a normal market that would be average, right? Before the rising interest rate earlier this year, you're still seeing multiple offer situation, right? So this is kind of a healthy market, almost 30 days to close, which is fine. In fact, let's go over the new listing medium price. Okay, the new listing medium price is kind of interesting, right? Because out of this past month, August, from July to August, the new medium listing price is 522, is a 7% increase appreciation from last year. So that's not bad. So there's a slight fluctuation. So the listing price is pretty consistent month over month this year. We don't see anything drastic. So there's just a list price, right? Again, that's interesting. Let's keep that in mind. Now, medium days on market. Again, 25 days is pretty normal. It's a healthy market, if you will. But before then, before the interest rate has risen early this year, the median days on the market is 8 days. So it tells you there were still multiple offers back then. There were still people bidding above the list price. Now here's the most interesting thing. Okay, this metric, price drops. This is the most telling. So let's go over this. Look at the price. Look at the price drop. Right before the interest rate rise, right, there were very small percentage of price drops. So that means these are extremely high sellers market still in Boise, and there was still a lot of multiple offers. Then when the interest rate has increased exponentially a few months ago, we have seen sellers that thinking they are still getting multiple offers. They're listing their homes much higher than the market dictate, than what the demand dictates. So over the past April, May, June, July, August, the past 5 months, look at the peak over here. Percent of active listings with price drops, 18%. Just for 1 month, right? So that's very drastic. Then that was back in June to July. From July to August, kind of slightly dropped to 17%. You know what that tells me? That tells me a lot of original listing price were overlisted based on the demand. So we can only surmise that the sellers are dropping their prices at least once or twice. You understand? So there are some price drops, okay, based on the percent of active listings with price drops. All right. So remains to be seen how much of a drop. So this again, the price drops at double digit is quite telling, is quite dramatic. So that means we kind of expect, I know in every market, every neighborhood, every street is really, really different, right? But it's a case by case basis, but the price drops clearly indicate there's some reduction of home prices. How much we don't know. 5%, 3%, 10%. It's kind of too early to tell, all right? And so let's go over median sales price again. All right, okay, we can only predict, at least I can, okay, I'm gonna give it a crack. I'm going to predict a little bit. The median sales price in May is 550. Still a rising market, still appreciation of 18% year over year from 2021, right? Now, 550, May 29, okay, ending date. Now we fast forward to June, July, August, 2.5 months later, the median sales price is 506. From 550 to 506. Now, again, I'm just guessing, these data are inconclusive, is not precise, right? This short-term trend is very unpredictable. So from 550 to 506, so there has a reduction of median sales price of almost, almost 50,000. So is this $50,000 is a real market drop, okay, or a actual sales price based on the affordability factor of a new buyer in the past 2 months, meaning the buyers, because of the higher interest rate, they can afford less payment per month, so they have the new buyer in the past few months, based on the interest rate rise, they can only afford to buy a lower price point. Therefore, the lowest price point they can afford to buy right now in August is 506. It doesn't mean the real price drop has occurred from 550 to 506. Is that the interest rate has caused people to buy a less affordable home at 506 instead of 550. So you can make the argument that the actual price drop may not be the actual 45,000, whatever the difference between this number and this number, but I'm sure you would agree there are some real price drop in the past few months, or maybe if it is 550 to 505, we're talking what's the percent? 50, 10% price drop based on these two numbers. Okay. So I don't know. You tell me, right? By the way, you can make a comment at the bottom of my video to see what your thoughts are, and I'll be more than happy to answer some of your individual comments if you want me to. All right. All right, Nancy, let's see what other metrics. Months of supply. Months of supply, this is very interesting, okay? Now, wow. We all know 6 months is a balanced market. That means the number of inventory available versus the number based on the demand is 6 months is a balanced market. We all know that already, right? I assume you know that. Now, anything that are less than 6 months are still a seller's market. Anything over 6 months is a buyer's market, right? So the ending date of August 14, 2022, the weeks of supply is 15.6. So 4 weeks per month divided by 15. So we are almost at 4 months supply of inventory. So what does that mean? That means still a somewhat of a seller's market. But if this trend continues for the rest of this year and beyond, if we see more than 15 weeks, if we see like 18 weeks of supply, that means 6 months of inventory available. So that would be a balanced market, if you will, right? So we trending toward that point. So that tells, base this trend line, look at before the interest rate has skyrocketed. Oh, by the way, the interest rate at 5.5%, for example, is not the end of the world, right? The interest rate itself will not kill the housing market, if you will not cause a crash. Okay, I made other crash videos recently, and housing market is not crashing because we are historically still at a very low supply, and the demand is still pretty strong. Okay, so if you think 5.5% or even 6% is very high, no, from a historical basis, is still historically low interest rate. Still, housing market is still, in my mind, long term is still very strong, even short term. But anyway, look at before the interest rate have risen back in early this year. Look at the weekly supply, 5.1. I mean, a little more than 1 month supply of homes of inventory back in February and March. That is insane. That is historical low inventory. Then, before you know it, because of the interest rate rise, demand has subsided dramatically for whatever reason. Some people fear about a recession, about the economy. They don't feel confidence about the housing market. So a lot of people are staying in the sideline. And so therefore, some sellers are desperate, not all, because many sellers has already achieved a massive amount of equity in their homes, right? They're not desperate to sell. There's very stress out there, very little stress out there in terms of equity, right? So a lot of homeowners, 40% of the homeowners in the nation right now have no debt, no mortgages. And the remaining 60% that have mortgage debt on their houses, they have achieved massive amount of equity, right? That they're not under stress. But some people, some sellers, they want to sell based on the life situation, divorce, death, probate, or people want to sell and move to out of the country or somewhere, and they're going to sell no matter what, right? They will do that, right? That's how it is. Everybody's situation is different, but I see some panic based on this trend. So a little bit more inventory, people putting a housing market, even though most people are locked in at an interest rate of lower than 5% these days, right? But anyway, this trend tells me a little bit more inventory coming to the market and not enough buyers. So therefore, the weeks of supply has dramatically changed in the Boise market. I mean, right? That's pretty obvious, right? Do you agree? All right. So that remains to be seen. So anything else? Okay, average. Okay, one more thing, one more important metric: average sale to list ratio. Average sale to list ratio tells you, based on the final list price, whether any prior listing reduction or not by the seller, what's the actual offer price that was accepted based on the list price? What's the percentage? So this is very dramatic. Also, look at this. Look at this. Average sales list price is 0.98%. These mean that the buyers are able to enter into a contract, and they're able to negotiate a purchase price, which is on final purchase price, which is less than the listing price. In this case, 2% less than the list price. Very dramatic. So you can see the buyers have an upper hand, right? They're able to negotiate for a lower contract price than the final list price by the seller. Now this is back in August. Look at as recent as April of this year. We are still this trend tell me there are still, at that time, a few months ago, the sales price, the list price is either equal or they're able to sell their homes higher than the list price. See the dramatic, because again, so some people say Boise is one of the most overvalued housing market in the country. You can make the argument that could be a little bit true. Overvalue, what does it mean? Overvalue, one of the most. There are like 300 markets, according to this one website, forgot the name of it, that are quote unquote overvalued. That means the income that exist in that market cannot support those kind of high prices of homes and the mortgage payment. That's what they mean by overvalue. So yeah, so because of just like other hot markets in the past few years, in other markets, Boise, the income level just are unable to support the skyrocketing of prices that's just occurred in the past few years during the pandemic. Does it make sense? So does that mean that the house is going to drop, significantly? We don't know. It's too early to tell, but there are some signs based on the data I just showed that we might be seeing 3% drop, 5% drop in the actual value of the home, right? All right, I think that's it. I think I have just about went over everything. So here's the big picture. So here's my takeaway from this from this analysis. I will say if you're a primary home buyer, right? If you still like the Boise market for whatever reason, if you want to live there physically because you're able to work remotely and you still have a very high salary, if you just moved into the area a few years ago during the pandemic because of remote work and you used to live in California somewhere and you're still earning a high salary, if you want to make Boise a place where you and your family want to live long term because you like Boise because of all the attributes that are available in this region. We're talking, still fairly affordable cost of living, I would say, and also is a you have a 4 seasons. You can go skiing, you can go hiking. So it's a healthy economy. So it's a good place to raise a family. So if you want to be a home buyer, if you want to buy a home, even right now, if you can qualify to buy with a higher mortgage rate, if you have a down payment, if you have some cash reserve, and in your life situation, you're ready to buy, thinking is a long-term investment. You have to, stay in your house for 7-10 years or more, right? You can ride out the storm. If you're in that situation, by all means, buy it, right? I mean, don't worry about these daily fluctuations, right? I mean, because, people need a place to live anyway. But as an investor, that's a little bit different. As an investor, I teach my investors to buy when the rent to value ratio makes sense. But it makes sense back in 2019 when the median price for a home in Boise was 319. You can the number makes sense then because when I recommend an investor to buy a house, it has to meet certain numerical formula criteria, and one of the numerical formula criteria is a rent to value ratio. A single family home you investor want to buy, whatever the median price, if it's 319, you multiply by 0.07%. 0.07% multiplied by 319 equals around 2,000, right? That 2,000 or 2,100 should be the monthly gross rent. 2,100 rent on a 319 price. If you put the metric, the standard that we use for down payment is 25%. At 25% down payment at 6%, giving the 0.07 ratio, right, which is 2,100 gross monthly rent. If you minus your mortgage, taxes, insurance, property management fee, whatever, at the end of the day, monthly, at the end of the month, you should have at least break even to a positive net cash flow. However, so 3 years ago, there might be the right time to buy as a turnkey cash flow investor, but now the prices increased from 319 to all the way to 522. There's no way any investor with 25% down payment with a 6% mortgage rate, even if the rent has go up to 2,300, which is possible, even 2,400, given this price range, you're not going to cash flow. The only way you can cash flow is by all cash, right? With no debt, no mortgage. But how many people have the money to buy all cash for a rental property, paying $500,000 of cash to get little bit of return? a low rate of return, a low cap rate of 2%, whatever. So the number does not work for investors to buy, at least mom and pop, single family home, real estate investors that are armed with a 25% down payment. It does not work in this market. And so as an investor, it's very, very, for mom and pop investors, it's very, very hard to enter this market because of the skyrocketing of prices, and the rent increase have not caught up with this price rising. So, but primary home buyers, by all means, you should do it if you can. But investors, you have to think twice, right? I think that's enough for me. Just my recap is: would there be a crash in the Boise market? No. Would there be a correction? How do you define a correction? How do you define a correction? Maybe 5%, 10% decrease in home prices for the next few months, or even for the rest of this year. Maybe, perhaps, there's a good probability that's going to happen. Would there be a bubble? How do you define a bubble, right? All these fancy buzzwords: crash, bubble, house recession. I'm overwhelmed by this new terminology. I mean, people just coin this terminology based on today's situation, housing situation, and that scare the heck out of people. It's not doom and gloom. Boise, for the long term, as long as we see continued job growth and population growth and migration into this area from California or other places, and the good and the high quality of living conditions here in Boise metro area, then for the long term, it makes sense, right? For at least for the primary home buyers, right? So, so for a crash, I don't think it's going to be a crash because, like I said, supply still exceed demand quite drastically from a big picture historical point of view, right? We still need about 1.5 million homes to be sold per year, and right now, the projection is only 500,000 of homes being sold. So we are still 1/3 of the level of home sale to achieve a balanced market nationwide. So there's a tremendous amount of homes. The builders are not building enough. The building are pausing construction. Some of you might have heard, and the sellers are sitting at an interest rate of lower than 4%. They're not going to sell. They're not going to sell a house right now where they lock in at a historically low interest rate and potentially upgrading by a newer upgrade to a home that can cost more still and paying a 6% interest rate from 3 to 6%. They have to double their mortgage payment. Why would they want to do that, right? So sellers are not selling moving forward as much, and builders are not building enough homes because the demand is not there for them to build any more new homes. And the demand is still going to be great, especially when the interest rates are lower down the road. If who knows, then we see another potential boom. Who knows? All right, thank you so much. That's my take. Hope you got a lot out of this. Make a comment below. What do you think of my analysis? I'll be more than happy to answer them. We will talk about many markets every week, many metros. If you want to talk about certain metros that I have not touched on, please put a comment below my video, and also subscribe to my channel. Click the like button if you like this detailed analysis, and of course, and you can also enter my website, the Yee Real Estate Network .com, and subscribe to your email for free member of our community, and you will receive free weekly updates about investing opportunities in a market that we're promoting. Turnkey, one-stop shop, property management, everything available, off-market, great cash flow properties in the best markets in the country, South and Southeast. Thank you so much. This is SeeWing Yee from the Yee Real Estate Network. Have a nice day. Bye-bye.